All right. Good afternoon, everyone. It is just after 1 p.m. on Wednesday, April 3. This is a meeting of the Property and Casualty Advisory Council for the Office of Commissioner of Insurance. My name is Chris Swigert. By day, I work at West Bend Insurance, and I serve as chair. First of all, thank you to everyone for accommodating us, including OCI, with turning this into a Zoom meeting with regard to the weather. We weren't sure how the weather was going to turn out today, and it was a little bit dicey this morning. So glad that we all stayed safe and warm. Just wanted to set a couple of ground rules, and then Jeff Grothman here is going to correct me where I missed some. But what we'd like to do is ask for everyone to remain muted, just like we normally do on these Zoom meetings. And we're going to have several presentations along the way today. And council members, during the presentation, feel free to unmute yourselves and interject. We'd ask everyone else, other than the council members, if you have questions, please use the Zoom features of either the comment or send the message, or else raise your hand. And Jeff, I think you're going to be moderating that. So Jeff, have I missed anything there?
No, I think we hit everything. So
fantastic. Great. Yep. Well, and maybe what we'll do also is, rather than go around the entire room physically like we do when we're in person, what I'm going to do is I'll kind of do a roll call here for the Property Casualty Council members. Everyone else, other than council members, if you wouldn't mind, again, use that Zoom feature and put in comments your name and who you're with, and then that way Jeff will have a record here for OCI of those who attended. So we really appreciate that. With regard, though, to the council members, just to make sure everyone's here. So Janet Detman from American Family, are you present today?
Yes, I am here. Thanks, Chris.
Great, Janet, thank you. And how about Kelly Golden from Wisconsin Mutual? Okay, maybe she wasn't able to join us yet. All right. And Daryl Zaleski from Spectrum Insurance. Daryl, are you with us this afternoon?
Hey, Chris, I'm here.
I see you right there. Perfect. Thank you. And we also have Margaret Nunn sitting in for Maggie Olson from State Farm. So Margaret, are you with us?
I'm here. Thank you.
Excellent. I see you right there. And then Nick Arnoldy from Marshfield Insurance?
Yes, I'm here.
Fantastic. And then Trina Bond from Housing Resources.
Hello, I'm here.
All right. Fantastic. Well, good to see everybody virtually.
You too.
All right. So with that, we'll call that introductions. What we're going to do is during each of the presentations, we'll have our OCI members introduce themselves as each presentation is made. So we'll start with our council minutes. So those were circulated, and we don't need a motion or second. If any council member has any additions or corrections, you can let us know. Any additions or corrections? I'm hearing none. So Jeff, I think we can have those minutes stand. Next on our agenda then is welcome from Rebecca Eastland. I believe Rebecca is not able to make it today, but Sarah Smith from OCI, I think, is going to step in. Sarah, I'll turn it over to you.
Yeah, thank you, Chris, and thanks everybody for joining us. We're happy to be able to pivot really quickly to a virtual option given the weather. I know it looks like it's pretty windy still today, even if the slush has subsided. So our joke yesterday was we're just going to save you all from some additional auto claims. So you're welcome, keeping our cars off the road. So unfortunately, Deputy Commissioner Eastland is not able to join us today due to a family emergency. So we'll hopefully be able to have her in the next one to kind of introduce herself. But Deputy Commissioner Eastland joined us back in January. She had also previously worked at OCI for 16 years. So some of you may have interacted with her when she was in our working in financial regulation for us. She spent the last few years working with IAIS, the International Association of Insurance Supervisors. So you may also be familiar with that organization. And so she's definitely got a wealth of experience. And we have, already learned a lot from her. And she's been a great addition to our leadership team at OCI in the last few months. So hopefully we'll be able to welcome her to a future advisory council meeting so she can introduce herself and meet all of you then. But yeah, thanks everybody for, again, pivoting to this virtual option really quickly. And I'll just hand it back to Chris to keep moving through the agenda.
All right. Well, thanks, Sarah. We look forward to meeting her at the next meeting, and please extend best wishes to her. Let's move on then to NAIC issues. And I believe Tim Cornelius from OCI is going to walk us through that. Tim.
Good afternoon. I'm Timothy Cornelius, and I just have a few brief updates. So under D committee, as many of you are aware, they're conducting a homeowners data survey. And this survey is really meant to help inform state regulators gain a better understanding of the current state of the homeowners market, including how coverages and deductibles have been impacted by affordability and availability challenges. The responses for this survey are due June 6th, and the committee plans to set up a steering committee to develop a framework for how to analyze the data that's collected. And so then moving on to E committee, the bond project was recently completed, and several of the revised SSAP changes are effective January 1st, 2025. Our office recommends that your accounting and investment staff be aware of these if they haven't been following the issue over the past couple of years. It's just kind of a heads up to double check that. Under H committee, for the cybersecurity working group, that group adopted the cybersecurity event response plan, which is really a guidance document for regulators to use in the event that they're notified of a cybersecurity event by a company. Just kind of like a step-by-step best practices document. And then finally, for the privacy protections working group, this is one that's been going on for the last couple of years, and it's going to move forward under new leadership of Commissioner Beard from Indiana and Commissioner Popper-Severnhouse from Illinois. We've only met once since they took over the leadership roles, and we're going to kind of take a step back with this group and kind of redefine some of the core concepts. And that's also going to include kind of looking back at previous drafts and seeing, what parts of drafts cover those core concepts. And kind of, I think, really just kind of reevaluate where we are and redefine the scope a little bit moving forward. I don't think it's a restart by any means, but I think it's just kind of a level set. That's the updates. We're here for any questions if anybody wants us to address any other working groups, committees, or other issues.
Great. I've got a follow-up question, but I'm just going to pause first to see committee members. Any questions on anything that Tim's brought up so far?
I'm monitoring, Mr. Chair. We don't currently have any questions, so why don't you go ahead?
Oh, great. Thank you. Tim, just wanted to follow up, and I'm not sure if this is the right agenda item to put it on, but obviously the NAIC's AI bulletin, we know there's been good dialogue, I think, back and forth between the industry and OCI and the trade associations on that. Wasn't sure if you wanted to comment on that. I just had a few thoughts maybe I wanted to share, but it sounds like that's proceeding as well.
Yeah, so I can kind of comment. I'm not kind of the lead on that, but I can kind of comment on where it stands, and I'm happy to hear any comments that you have today. We've heard back from quite a few of the trades, NAMIC, WIA, and the WCLI on it. We're currently reviewing kind of all those comments and feedback, and kind of incorporating some of those changes into a potential draft. We don't have a specific time frame for adoption, but it's just kind of under review right now.
Well, that's great. No, I appreciate that update. I'll just comment more so as kind of well, first of all, thanks for collecting all that input and taking it under consideration. I'll just give you some of my thoughts more as I'm going to call it a casual observer. So obviously this is a bulletin that was drafted by the NAIC, and I'm sure their goal is that the various states adopt it. And so uniformity, generally is a good goal. And so I certainly don't have a problem with that. That uniformity makes sense. I think that the challenge perhaps that the industry sees is just visually when you look at it, it doesn't look like the typical bulletin that OCI in Wisconsin would issue. It has that visual appearance of being something that looks more like a statute or a regulation. And everything that I've heard so far from OCI is that no, this is a bulletin. This is not changing law. This is advisory. And I think, to the greatest extent that OCI can help clarify that to make sure that's what OCI means, that it's more advisory, I think that would be really helpful, because that's a very helpful lens for the industry then to view the document. So that's just one person's remarks. And I believe that's consistent with what OCI is saying. If there's anything I said that's inconsistent, certainly let me know.
No, that sounds consistent, and no, we appreciate the feedback, and no, that's what we can take that under advisement.
Yeah, no, that's great. Thank you. Any other thoughts from council members? Any other topics related to NEIC issues? Jeff, any other questions from our audience?
I don't see any at this time.
Very good. Well, thank you, Tim. Appreciate the update. Why don't we move then to the 2023-2024 legislative session? And Sarah, back to you.
Thanks. So I can keep this update pretty brief. The 2023-24 session has wrapped up. The State Senate and the State Assembly have had their final floor periods a few weeks ago now. We were excited to see our tech bill get passed and signed a couple weeks ago. And we appreciate everyone's support for that. I know I gave an overview of what was in our tech bill, our kind of compilation of minor technical changes at the last PNC Advisory Council meeting, and that bill did not change from the last PNC Advisory Council meeting. So I'd be happy to answer questions about any content that was in that bill. But that was really our big, achievement for this legislative cycle, was getting that bill passed and signed by the governor a couple weeks ago. Otherwise, there, wasn't a ton of PNC activity in the state legislature in the previous, in the past legislative session. Certainly, going to be an interesting new legislative session in January next year, with potentially a lot of new members in both the Senate and the Assembly. So there may be some more activity, more interesting ideas coming out of the state legislature related to PNC. But this legislative session was pretty quiet on that front, other than the couple of kind of changes that we made through our tech bill, which are always intended to be non-controversial and are based on feedback that we receive from stakeholder groups, like many of those on this meeting. So so I have a pretty brief update for today, but I'm happy to answer questions, or if anybody has questions that they want to take offline, or any potential suggestions for the next session's tech bill. It seems early, but we're starting to compile those now. So if anybody has any thoughts that occur to them, feel free to reach out to me, send me an email with thoughts. So
Great, Sarah. Thanks. Council members, any questions for Sarah?
Yeah, Janet from American Family. I do have one question. Hopefully it's fairly easy to answer, Sarah. Last time we were together, we talked about the open positions that were approved, and then the steps being taken to fill those positions. Any update on where you are with hiring?
Yeah, we are still, hiring on an ongoing basis. We have an insurance examiner position that we just posted recently. And I know for a couple of attorney positions, and I don't want to speak for our chief legal and deputy legal counsel that are on, but there have been some interviews, and we're actively in the hiring process for positions that have been added to our agency. So looking forward to getting those staffed and hopefully reaching a point of fully staffed. Seems like that's a challenging goal in this market for everybody, but we are doing our best.
Thanks. Appreciate the update.
Yeah.
Great. Council members, any other questions? Jeff, any questions from the floor?
I don't see at this time that we have any questions from our stakeholders that are joining us.
Okay.
Always welcome any stakeholders feedback or questions that are joining us. And once again, for those that have joined us late, if you could please enter your name and your organization in the chat box, so we can keep an accurate attendance of those that have joined us. We would greatly appreciate it.
Great, Jeff. Thank you.
And I think, Mr. Chair, that we do have one item under the other issues column under Sarah's area.
Great. Sarah, why don't we go to that item then?
Yeah, so I actually am going to hand this off as well to Tim Cornelius, again, our Deputy Chief Legal Counsel, to provide one more legislative update that's not specific to the legislative session and related to the rulemaking process. So take it away.
Yeah, I just wanted to kind of briefly touch on, and we discussed it, I know it was raised in a question last time, and that is adding farm coverage to the Wisconsin insurance plan. We'll hopefully have a rule to be posted soon for public comment. Kind of a really high level overview. I mean, we're trying to limit it mostly to just kind of like a basic property farm coverage, but also giving WIP some flexibility in terms of determining, limits and, the scope of that coverage. And, so we've been kind of working on that recently and trying to, determine what would be the appropriate scope. In kind of bringing it up today, I really encourage members to review and comment when that is posted for the public comment period. We only received comments from WIP when we did the statement of scope. And this is, obviously it's a very important rule, it'll be a big lift for WIP. And so we do, appreciate any feedback when it is posted.
Excellent. No, it's a good reminder for us to take a look at that and comment as needed. Excellent. Council members, any questions on that? Jess, go ahead, Janet.
Sorry, once again from American Family. Tim, do you have any idea or perspective of like a timeline that you would envision this happening at the WIP if indeed it does move forward?
That would really, we need to do more consultational WIP to see the time frame. Initially, we were going to push it as an emergency rule.
Mm-hmm.
I think we're going to back off on that and just do it as a permanent rule to give more time. And so I think a lot of you would know better than me for like product development and the time frames. And so we do want to make sure that it's done right. And so I don't really have an exact timeline for you, but we are looking probably a little bit farther out, just to make sure that it's, obviously we can pass the rule and then do like later implementation dates. But obviously it's a product that needs to be ready.
Great, thank you.
That needs to be ready.
Janet, thanks for the question. Any other questions, council members? And Jeff, anything from the floor?
Nope, not seeing anything.
Okay. We are ticking through these items like crazy, which is fantastic because we're now on to, I know a topic that generated a lot of interest and discussion last time too, Division of Financial Regulation update. And I believe Amy Malm is going to give us an update on WRC and the town mutuals.
Yes, thank you. So I'm Amy Malm. I'm the administrator for the Division of Financial Regulation here at OCI. So when we talked in October about WRC and First Auto, we had indicated that there was a lack of interest in the rehabilitation plan that we had put out. As a result of that, on November 1, we did file with the court to put WRC and First Auto into liquidation. And the court issued the order on January 2nd with an effective date of January 1. So this Wisconsin Insurance Security Fund coverage was triggered on January 1. So as of today, both of those entities are officially in liquidation. And over November and December, OCI, we really took the time to work with our various trades and stakeholders to ensure policyholders had coverage going into 24 and to make sure they were minimally impacted as much as we could. So I do want to thank the agent trade groups for assisting us in that and getting the message out and working with the auto policy holders under First Auto. And although it's not 100%, prior to December 31, 83% of the First Auto policies had been moved to other carriers, and in Wisconsin that was an 85% level. So not 100%, but still, I think it was a good effort on all of our parts to make sure consumers were protected with the impending liquidation. As for the security fund, we are aware, when we went into liquidation, the security fund was prepared and ready to do their job on January 1. And this really allowed the security fund to start issuing claim payments to the town mutuals and any policyholders within a couple weeks of the beginning of January, and they have been continually making payments as they get information in for claims. The security fund did issue a $7 million assessment because of WRC and First Auto liquidation, which I believe was due the end of February. And the last time I talked to them, they indicated that things were going smoothly on the claim side, but that not everyone had paid their assessment yet. So if you're one of those and you still haven't paid, I would encourage you to do that. As for the town mutuals or our Chapter 612, just a little bit of a recap, on January 1 of 23, we had 44 town mutuals in Wisconsin. 34 of them were with WRC as their reinsurer. Today we have 8. And during 23, OCI approved several town mutual transactions to reduce it to 8. 7 of the town mutual insurers merged into other town mutuals that had reinsurance other than WRC. 12 of the town mutuals merged into what we already had existing Chapter 611 insurers. We had 13 town mutuals convert to Chapter 611, either individually or through a combination of several town mutuals coming together and doing a conversion. And then we had 4 that converted and then affiliated with a Chapter 611 insurer. One of the remaining 8 town mutuals has filed for a conversion effective January 1, 25, and that is currently under review by my team. As well as we have also received another merger filing between 2 town mutuals, and that one is requesting a July 1, 25 effective date. So, even throughout 24 here, the number of town mutuals we have in Wisconsin is continuing to decrease, and we do anticipate further consolidation throughout 24. Once the reinsurance, we know a little bit more about reinsurance. For going into 25, we anticipate there may be some more activity. That's my update, and I'm open for any questions.
Great update, Amy. Appreciate it. Council members, any questions for Amy? How about questions from the floor, Jeff? Any questions?
I don't see any at this time.
Okay. And I guess one last question, just in general, as you see all this activity, are there any looming concerns that OCI has just in general regarding what we're seeing with fewer town mutuals? And I know that Tim gave us a nice update on WIP and how there may be some amendments there around farm coverage. Any other large concerns on the horizon, or is it a bit of a wait and see approach?
I think one of my concerns is, there's mainly one reinsurer covering the remaining town mutuals, and we don't know what the decisions of that reinsurer are going to be yet. So that's when I say there may be more activity. It may be coming from decisions that reinsurer makes. I have to say the weather is always a concern. As we do that, but I would say understanding the reinsurance market going into 25 is of concern and something we're watching very closely.
Amy, how many, this is Daryl Zaleski, how many town mutuals do we expect to have when this whole thing washes out?
With the current transactions we have in front of us, that would reduce it to 6 town mutuals. We are aware of several conversations happening in that space. It could end up where we have no technically Chapter 612 companies, but it's too early to know that for sure.
Excellent. Council members, or any questions from the floor, Jeff? Any final questions?
We have nothing in the chat, and I have no one that has joined us virtually that is raising their hands. So it doesn't appear that anyone has any questions. All
right, that's great. Well, Amy, thanks for the update. Okay. We'll move to the next agenda item, which is from the Division of Market Regulation update and trends data. And I believe Brian Derry is going to walk us through that item. Good afternoon.
Good afternoon, everybody. bear with me, I'm coming off a fun week with the flu, so my voice is, I'm gonna try to plow through this. I've been drinking water to make sure I'm ready for this, so. So trends data, comparatively from our last meeting to now, 2023 ended pretty much where we expected it to. The only anomaly that I saw was that we actually had a little slowdown in automobile. When we spoke last in the fall, we were anticipating or projecting around 616 complaints in auto. We ended up at 592. Homeowners, we had projected 588. We ended up just a little higher than that, 597. And as of right now, through the first quarter, we're actually right now trending to be lower on both ends of those. But what we've seen so far, we ended last year for automobile, 592 total complaints. As we usually see, the majority of those coming from claims handling. We did see a slight uptick with policyholder services. That's usually where you see the rate complaints regarding rate increases. Obviously, we've seen quite an uptick in premiums in the last couple of years, and that's obviously become a significant pain point for consumers. But otherwise, the total complaints that we're seeing, the reasons are falling right in line from where we are usually seeing in years past under automobile. Homeowners, as I said, we end up finishing a little higher than we had initially projected. We came in at 597. This one actually kind of brought out, well, we're starting to see something in 2024 that we weren't, but we finished last year 597, again, majority with claims handling. And again, as you can kind of see the year to year back to 2021, everything kind of all falling in line. But in 2024, we're currently sitting at 114 complaints. And we've actually seen an uptick in policyholder service complaints, taking a larger piece of the pie than we usually see. And again, one of the things that in talking to a lot of my examiners in our meetings that we're hearing is just the pain that they're seeing, that they're feeling, the perception of ever increasing premiums. And it's something that my examiner have gotten down to a science of explaining that it's a lot of has changed. I think we talked about this back in October. There's obviously a growing concern with regards to hail and wind and storm-related claims and the way that those are being handled and the frequencies they're coming in for the carriers. So that is something I'm definitely going to be keeping an eye on. And back to auto real quick, I kind of glazed over that. We're actually seeing, again, the same thing, but even in a significant number there, where over a quarter of our 143 complaints year to date for auto are policyholder service complaints, as opposed to just being claim handling or underwriting. So definitely something that as the year goes on, we're going to keep an eye on and see where those are going and find out if there is anything that could be altering that significantly and affecting that. Fire and allied lines, again, it's right in line where we expected. We actually projected 57. We finished at 57. And as of right now, we've seen 12 year to date. Liability, same thing. We projected 40. We finished at 40. Currently sitting at 8. So we're actually possibly looking at a slower year in liability claim complaints. And then workers' comp, again, I think we came in just under the projection at 54, and we're currently sitting at 14 to the first quarter of 2024, which would actually be a significant decrease. On the last page of the handout that we provided, Christina Keeley, who was the section chief for market regulation, she and I had a conversation last week. We kind of just wanted to look at a more broad range of numbers and trends and regarding the auto and homeowners. And one of the trends that we're seeing is is what has been a significant increase for homeowners from 2018 up to now. Auto getting back to where it was in 2018. So if you look back in 2018, auto had 640 complaints, homeowners had 373. Auto, like we anticipated, had a slight dip during the COVID period, but seems to be trending back towards where it was in 2018. But the one thing that kind of caught our attention was obviously in 2018 we had 373 homeowner complaints. We had a big jump in 2019, 2020, and 2021. We obviously saw a drop because of COVID. People were home more, less claims were being filed. And then the last 2 years, a significant jump, but even a jump last year that's way higher than we've seen ever. So homeowners is really starting to take a bigger hold in the sphere of complaint totals than we have seen before, and kind of aligning itself with auto complaints numbers wise. Yeah, those are what we're seeing. I don't think much has changed in our vision and what we're kind of keeping an eye on. I think, like I said, the last thing we talked about in October was the relevance of storm-related claims and how those are going to affect business as a whole. Whereas the carriers, are we going to see changes in underwriting with regards to higher wind hail deductibles, less replacement costs, more ACV, et cetera. So but that is what all of our data for this round.
Hey, Brian, thank you. Council members, any questions for Brian?
Yeah, this is Janet. I do, Brian, actually. This was really interesting for me to look for. Thanks for answering my question around what does policyholder services actually drill down into. Rate increases make perfect sense. My question still is around the homeowner, because I thought this was a really interesting slide. When I looked at the graphs and saw that policyholder services specifically for homeowners really didn't change too much in 2023, but you've seen it definitely in 2024. Makes sense. However, the number of complaints coming in around homeowners jumped really heavily in 2023 without having that specific data point or that proportion go up. So I'm sitting back scratching my head going, why? Any idea why?
You know, that's obviously the question we've been asking through the first quarter so far. I'm actually going to be working with one of my examiners over the next month or so to kind of dig in a little bit and maybe see if we can have a better idea trend-wise as to what we're seeing closeout codes with regards to our files. So the specific codes, any statutes that we're applying to the files, to see if there's any specific commonality. You know, I've now been in this role for 7 going on 8 months, and the two main things that I hear on a daily basis are increasing premiums. Well, I guess 3 claim denials, but also again, these are all the perception of the consumers is the handling of claims. I actually had a very unique opportunity to speak with the Fox Valley Adjusters Association last month. And that was obviously a very unique experience for us to be able to actually speak to the carrier side instead of just the consumers. Because their question is, well, you know, what happens with a complaint? How does a complaint get created? What are some of the reasons behind a complaint? And the biggest thing that I've noticed in this 7, 8 months I've been here, one of the reasons I took this role is consumer education, is helping the consumers understand what their policy is, what it's covering, ACV versus replacement costs. These are conversations that are, in most cases are being had, but consumers don't always hear every bit of it. But is there something that needs to be done to kind of drill home some of these elements of, why do I only get actual cash value, or why is, do I have, based on the age of my roof, am I only getting so much money here? And so I guess what I really am trying to understand and what I want to see is, I'm kind of just perusing through a lot of these files this year, is there a common topic that consumers are calling about that isn't just, hey, I'm just mad because I got denied? Is there something they didn't understand? Is there something that they wish they knew better? And I'm hoping that by looking deeper into that, we can kind of find that that common trend. And then my goal, at least in my department, is to then strengthen our consumer education and outreach to those trends and to those specific topics that consumers seem to be struggling with.
Yeah, that's great insight. I appreciate it. Thank you.
Sure.
Brian, I would just throw in, from being on the more of the front line.
Yeah.
I think one of the reasons may be, and it's my opinion, is that we've had 2 years of a lot of storms and some severe storms in Wisconsin. And when you have severe storms, you're going to have more claims. And I think some consumers, you know, when there's a hailstorm and the neighbor gets a new roof, but I didn't get a new
Yep.
roof, I think you're going to see a lot of that. But hail can be so specific from house to house and the age of the shingles. So I think, you know, from the consumer standpoint, there's maybe not quite the knowledge, but there's so many issues going on, from, you know, lack of, you know, some roofs don't get replaced very quickly because of a shortage of labor to replace roofs. And I think that falls back, right or wrong, as a complaint against the insurance company because they're not getting their new roof on a timely basis.
Sure.
That comes into play. I think you're going to probably see more complaints even going forward when you have changing terms and conditions that are going on, higher deductible, like you said, ACV on roofs,
Yeah.
roof schedules. But I will say that I think the insurance companies are doing a pretty good job of getting out ahead of that. And I know retail agencies are also trying to educate our customers on the changing terms that are happening. The unfortunate thing is that we'll have these conversations and changes will be made to the policy 60, 90 days out. Notice will be given. But the consumer, as you kind of mentioned, kind of forgets about that at the time of the claim. And they don't realize they don't have a roof schedule or ACV on a roof. So again, the companies do a really good job. We try to do a really good job. A lot of times the consumer, you know, insurance is not a very easy thing to understand. And it does cause some problems from a communication standpoint.
No, I mean, I fully agree with you. And you know, when I was compiling numbers for the meeting in October, I also kind of looked at some of the storm data that we had been seeing. And there was a significant jump in, you know, storm-related events, hail over 1 inch or over 0.75 inches. There had been quite an uptick in those occurrences throughout the state, dating back to about, well, around this same period of time that on this last graph, 18, 19, 20. We actually had a little bit of a slowdown in storm. We had a really rough start to the year last year. We had a lot of different events. I know, you know, as I mentioned last year, I come from an adjuster background. So you know, I was dealing with, you know, a significant historic ice storm that we'd never really seen before. You know, we had a lot of hail events, and then obviously some light tornadoes near the state line area, and then a couple up north. But as the year progressed last year, and this could also explain why we've seen a little bit of a slowdown numbers-wise, we actually had less events comparatively over the last 3 years in the second half of last year. But it doesn't change the fact that overall, yes, as you said, there has been a growing number of these storm events that we hadn't seen before. I mean, you know, we're talking, you know, anywhere between 25 to 30 events per year, where, say, a decade ago, we were maybe in the teens. So, I mean, that's obviously a big part of the jump. But then, you know, that just explains more claims. Why are we seeing the actual complaints? What's happening with these claims that we're seeing? You know, more and more people are just not happy and feel that, you know, the need to reach out to us to intervene, which, you know, again, our authority is very finite and limited when it comes to stuff like that, fair settlement and determining of damages and whatnot. And you're right, yes. I mean, why do my neighbors get a new roof and I don't? Well, I mean, your house is covered by 20 oak trees and your neighbor's in a wide open field. I mean, I could go on all day as to why there's some houses get it and some houses some houses don't.
Yeah, there's just so many variables that go in, as you know, with a roof. There could be a 18-year-old roof or a 2-year-old roof. I mean, they're gonna get adjusted differently, but
Exactly.
one last
Correct.
final comment that I would make, and I know you're getting a lot of complaints on premiums going up.
Yeah,
And we have seen that is true.
sure.
But what my comment or my opinion would be on that is that I think, and consumers would have no idea of knowing this, but insurance rates in Wisconsin are still very competitive,
Mhm.
from a homeowner standpoint and an auto standpoint relative to other states. And, and while there are a lot of larger increases going on, we see, as we have customers from other states, Wisconsin premiums are still very, very competitive.
Sure.
And again, the consumer has really no way of knowing that, unless they have a second home in California, Arizona. But we're still in a very, very, very good position from a consumer standpoint on what they pay for their insurance. But again, they may not know that, and there's really no way for them to know that.
I agreed. I mean, yes, I am, I fully agree with that. I'm a native of Illinois, so I've lived in both Illinois and Wisconsin. So, one of the great things about moving here 2 years ago was I saw a significant decrease in my insurance rates, both my
Yes.
renters and my auto. So I was very grateful for that when I moved up here. And it is something that we do touch on, we talk about with the consumers. I mean, but at the end of the day, the consumer only cares about what their bill,
Exactly.
their bill went from this number up to this number,
Yeah.
and that's, one less thing that they're able to spend money freely on. And,
Yep.
but yes, it is a very good, a valid point that we
And
are.
that's one thing on the front line that we do try to educate our customers on, is telling them that Wisconsin is still a very, very good state from a
Yeah.
premium standpoint. And I know that's starting to change a little bit with some jury awards and some nuclear verdicts, but I won't be, we don't need to get in that, but I think,
100%.
that's starting to creep into the state a little bit, but we're still very, very competitive, and we have a lot of great insurance companies in the state, so.
Agreed, yep.
Trina, you had a question, or wanted to make a comment.
Thank you. I just wanted to agree with what was said already, and I think the education is important, as Brian said, and the more that homeowners can get, the better, so they understand what type of insurance they have and what that means when they need to file a claim. That's it.
Trina, thank you. Really good dialogue, and it's going to fit very well, I believe, with our next agenda item. But before we get there, I'll pause again. Council members, any additional questions or comments with regard to the complaint trends? Jeff, anything from the floor?
No, it doesn't look like we have any other questions, but before we move on, Mr. Chair, I just want to remind, I think we've had a couple of new individuals join us. I just want to remind everyone that has joined us, if they could just quickly put in the chat feature, who they are and the organization that they're with. So we, as we're keeping attendance for the meeting, we're able to recognize your attendance at the meeting. So we appreciate it if you could just hop into the chat feature. And then obviously to remind any of the members that are joining us in the meeting that you're always welcome to participate in the meeting. We ask that either you use the raise hand function or that you drop your question or comment in the chat function, and we will certainly either call on you or make sure that your comment or question gets read. So please feel free that, and certainly I don't think I've missed anyone or anybody, but if I if anything, up to this point, if anything has been missed or anybody has a question or comment prior to or any of the information that we've already gone through, please feel free to drop some information in the chat box, and we can try to get that information answered.
Jeff,
Thank you.
Great. Yeah, thanks for keeping us running on in an orderly fashion. Why don't we move on then? Like I said, this discussion is a really good lead into our next agenda item, trending issues. And this is really, we appreciate OCI and the presentations that you've made on this agenda already. Now it's time more so for a little bit of additional dialogue. And so Amy or Jeff, I'm not sure which one of you are going to kick this off, but our first item is regarding roof replacement costs and full replacement to adjusted value.
Yeah, I could kick it off. Yeah, it came to kind of odd coming up from financial regulation, but as we talk with all of our domestic insurers, we're in the midst of that for right now through our annual analysis and understanding business strategies going forward. Common theme we were noticing is the changes in how roof replacement is adjusted, or the coverage, I should say, on that. We've heard some companies talk about the ACV increasing deductibles and that. And when we're having those conversations, it made me think of, it's like, well, I wonder if our complaints are going up because of this, because the consumers are not understanding and that. And I think Brian kind of answered my question on that, but I thought it'd be a good topic to bring forward just to see how much of our industry is making these changes. And I just wanted to highlight making sure the consumer understands it on their end, I think is imperative.
Sure. No, and Amy, I think great discussion. And I was thinking in advance of this discussion, normally when trade organizations, like we get together, we say, hey, we got to be careful with regard to discussions around antitrust and what we're doing in the future. Clearly, this discussion here is nothing having to do with, hey, we're getting together to try to, constrain good competition. We'll maybe be a little bit careful, naming specific companies and what they're doing. And I know, Daryl, you've obviously got a lot of experience with this kind of across various companies. I think I'll just say kind of generally from what I'm hearing, and also what you can find really on the internet around, hey, trends or articles, that it is becoming much more common to either have higher deductibles in general, but also this concept of a wind-hail deductible is something you see a lot in the industry press. The idea that it's maybe a percentage of the home value or a percentage of the coverage A. So there's that slice. But then also, you're right, Amy, you seeing in the industry more of these roof replacement schedules, which may be based on the roof's age. It might be based on the roof's construction material. Is it a metal roof? Is it an asphalt roof? So definitely something we're seeing more of. And I'll just generally say, and then I really want other members to chime in on this, that you're right. I think, the industry has communicated these, but, the interplay of these sometimes, the average consumer might look at it and say, well, get 80% in the schedule. That sounds okay, but may not think it totally through. So, communication, I think, always remains a good opportunity. But it's clear, I believe, based on what we're seeing just in the industry press, that this is something that's becoming a lot more common. Daryl, I'm not sure if I don't need to put you on the spot, but I'm guessing this is generally what you're seeing as well. And certainly other council members, please chime in.
Yeah, so I'll go first, and then I'm sure Nick will have some comments as well. But I think we're seeing wind-hail deductibles, percentage deductibles on commercial property. And then even within the state of Wisconsin, we're seeing it more in western Wisconsin than we are in eastern Wisconsin. And a lot of that comes from Minnesota has pretty much gone percentage wind-hail deductibles on commercial buildings a few years ago. And Minnesota is even seeing like 2, 3, 5% percentage deductibles. I think in general in Wisconsin for habitational, large property, hotels, we're seeing about 1% wind hail deductible on larger habitational hotel, large buildings. And again, that's even more so in western Wisconsin. I think insurance companies have looked at the weather patterns and noticed that maybe the eastern side of the state isn't quite getting hit as hard as western Wisconsin and from the Minnesota storms that come across. So I think that's in general what you see in commercial. In the personal market, the homeowners market, I think it's it's now very common to have a roof schedule. There's maybe one or two insurance companies that aren't on a roof schedule, but that is pretty much the commonplace now for homeowners is a roof schedule. And again, Brian, I think that's going to probably lead to some complaints. Again, we talked about notice has to be given ahead of time. We're trying to get ahead of that. But a lot of times the customers don't remember that a year later, 2 years later, when they have a damage, and it's like they see there's a depreciating or a roof schedule. I know the insurance companies in total, in aggregate, are losing, for every dollar coming in, a lot of dollars are going out. And so it's a bit of a problem. That's why we're seeing some of this adjustment going on. But at the same token, I've always felt, I think, personally, this is again my own personal opinion, an asphalt roof depreciates over time. You get to an 18, 20-year roof and it's lost its life cycle. And the way it was adjudicated in the past is the homeowner would get a new roof. And insurance, concepts of insurance are to bring you back to where you were. And in fact, they're getting a new roof. And so it's a big change in our industry, but it's probably the way it should be done, in my opinion. As roofs age, they lose their value. And it is probably going to cause some communication, or there are going to be some, it's incumbent upon us to communicate with our customers, the insurance companies to communicate. And again, I think we're doing a really good job at that. I think the insurance companies have come out with pieces explaining what it is. We have on the retail agency side of getting ahead of that and educating our customers about what's changing, because it is a significant change. So thank you.
Yeah, if Daryl teed me up there, if I could just add on to that. Thank you, Daryl. I think he pretty much hit the nail on the head with everything. We want to keep the competition pretty broad for the consumers, right? We want to keep all those options out there. And from what I've seen and what I've read, there wasn't many carriers that, were below 100 combined ratio. So they're having to pivot and do these roof schedules now, which makes sense. And I think is what'll help Brian in the future is just to make sure that those notices, those 45, 46 day or 60 or 61 day notices are as transparent as possible.
Yeah.
And then the other side of the coin is much like myself, when I get a lot of mail, how good are we looking at that? Me as a consumer as well. You're opening it up. I don't know what this is. I'm going to call Nick, my agent, tomorrow, and then I forget to ask the question. So then you have a claim a year down the road, and I didn't know anything about that. So that's going to be a piece to the puzzle, because it is changing, and it may have to for some time or perpetually. We'll see. But today was a good day. I only saw one altered term letter on my desk today, so they are coming in great length. So, but yeah, that's what we're seeing.
Great. Other council member, go ahead, please.
Can I ask a follow-up question?
Absolutely.
So when on the coverage schedules, the notice that goes out, is it giving like, hey, if you have a 10,000 square foot roof or whatever it is, it generally is costing $50,000 to put on a new roof, to just kind of have the consumer go through the math so they understand what their potential cash outlay is for themselves?
Yeah, from what I've seen, every carrier is a little bit different with their notifications. Most carriers are adopting, I think, if they haven't already, like a roof schedule like we talked, and is what you'll see on those schedules is asphalt shingles, you know, after 1 year, after 2 years, it goes down to 93%, 88%, 85%, whatever. I'm just throwing numbers out there. And it'd be helpful, you know, to have those schedules attached, in my opinion, if they can. I don't know if that's available, but the letters that are going out, some are including that, I think, and some are not. But the notices are definitely getting sent out in time. And we are getting phone calls with questions on it, but I just wonder how many people are getting the notices that maybe aren't as transparent and also aren't finding the time to call their agent and ask those questions, which are going to lead to questions for Brian, you know,
Yeah.
and we may see more, that graph go up next year because of that.
We will. And Amy, to answer, just to follow up on Nick's, I don't think the insurance companies are being that, there's not that much information that based on X, you'd have to pay $50,000. That's not happening. I know the legal notice is what the legal notice is. They are doing what they are required to do. I mean, we could, and maybe it's on the agents to then do more of a follow-up after that altered terms letter goes out. You know, I wouldn't mind having an offline conversation with you on that. I think Nick would certainly be part of that. If you and Brian wanted to jump on a call, we can talk about this in greater detail, because there's always things that can be improved upon. So,
and Amy, maybe I can just jump in as well. And you asked a great question. In talking with our claims and our underwriting folks, you know, we had talked about the concept of doing something like that. The challenge is you can have two homes next to each other with identical total insured value, but one's a ranch and it has a much larger roof surface than a two-story house, or one roof is very flat and the other roof has lots of gables. And so the idea of, well, here's an example of if you had a $20,000 roof, how it would work. We were worried that could mislead, because we can't guarantee that someone's going to have a $20,000 roof, if you know what I'm saying. So sometimes the example might cause some sort of reliance that is just unfair for the consumer, if that makes sense. So it's a challenge. It definitely is. I think the theme here is we want to be sure, to the best extent possible, that we, you know, continue good communication with the policyholder. And it's an interesting idea.
Yeah, I can definitely see that. And then, you know, the other thing I thought of is the general consumer. You know, you only put on a new roof every 15, 20 years, how much or whatever, you lose track of what that actually costs.
Well, it's an excellent point, because what a new roof would have cost 5 years ago and what it costs now is dramatically different as well. It's easy to lose track of. It's very easy to lose track of. Yeah. Council members, other thoughts, input, or Amy, other follow-up questions?
I just have a yes and. I love what Daryl had said about, you know, Wisconsin average insurance premiums are actually relatively favorable if you look industry-wide or countrywide. But as to Brian's point, unless you're moving from Illinois or Florida or somewhere else, you really don't have visibility. You probably are less likely to really care because you just feel what it's hitting on your pocketbook. But it's a really hard time to be a consumer, because they are getting hit at both ends. You know, you're here of shrinkflation right now, you know, throughout all the industries, if you will, where you're getting the same price for less goods, if you will, in some of the consumer goods. And insurance, because loss costs are going up so significantly, you know, you're getting less coverage, but you're still seeing your premium increase. You know, so unlike that candy bar that's smaller but still the same cost, for homeowners insurance, you're seeing your premiums increase, but yet you're getting less coverage. But if we didn't do that as a carrier and provide you less coverage, then your insurance premiums would even go up higher. That's a hard pill to swallow. So I empathize with consumers. We're all consumers. We all have homeowners insurance. It's a really tough time to be a consumer. So more education. We probably can't communicate enough and educate our customers enough about this. And I'll go on the flip side with one thing we had talked about earlier today was just reinsurance. You know, reinsurance for an insurance company right now is more critical than ever, especially with the catastrophic events that continue to happen at, unfortunately, record-breaking levels year after year. An insurance company's ability to get reinsurance is based on the total insurance or TIV that they have on their book. So how can insurance companies mitigate some of the risk that's actually on their books is by taking steps like roof replacement costs being adjusted a little bit, or a wind hail deductible on a homeowner's policy as well as a commercial policy. So many things impacting not only carriers, but customers as well right now. And it's a tough place to be right now for sure.
Yeah, you're right, Janet. And I would just add one other thing. I mean, we have a very robust insurance marketplace.
Mhm.
We have a lot of very good domestic companies in Wisconsin, and then non-domestic companies coming in here as well. And to keep that competitive pricing, we need those companies to be here, to be viable. You know, we have one domestic company that's that's going to be affiliating, but we can't have that on a mass basis. We need our healthy insurance companies, and so they have to do some of the financial things that they have to do. But in the long run, it'll be good for the consumer to have that very strong competition in the state. So
Agree, Daryl. Agree.
Great
Real
discussion,
quick,
everyone.
I want to chime in real quick. So Daryl, you had mentioned, you know, like the concept of roof payment schedules. When I got into the industry a few years ago, the roof payment schedule was more of a sale, in my opinion, was more of a sales tool, was you know, to help the insureds get their premium down. And even then, they fully didn't really understand what they were getting, that it isn't really depreciation. It's more of a contractually agreed to reduction in coverage based upon the set percentage over year. But so I guess my question is, as we enter this, you know, we've talked about some of the changes coming. Is roof payment schedules going to be the more prevalent option, or ACV? I feel like it sounds like roof payment schedules. No, okay, yeah. I mean, it sounds like the roof payment schedule is more prevalent just because it's that set amount, instead of wondering about, you know, because we don't know, materials have increased. I mean, we just talked about.
yeah,
I remember looking at a claim about 5 years ago I had where, you know, we paid $10,000 for the roof, and now we're looking at $21,000 for the same size,
right.
you know.
And some of the roof schedules, and I think Nick has got a better handle on roof schedules than I do, but I think a lot of the companies that I've seen, I think it's going to be commonplace, first of all, and not just ACV. I think they're going to have a roof schedule, and over time that might get adjusted, but I think what insurance companies are doing on those first 5 years or so are giving full replacement costs or something close to. And I think that's really good. And that is a really good thing. It's just as you get older, boy, you get a 20-year-old roof, a 25-year-old roof, there's no life cycle left of that thing. And so the old days are, you know, you get a new roof, and it probably wasn't, I don't know, I don't want to say wasn't right, but it probably wasn't the correct way it should have been handled. So back, you know, you talked about earlier about there were some roof schedules, kind of a tool to reduce premium.
Yeah.
Well, boy, we never really used it because of our competitive marketplace, that we could find a carrier that would offer full replacement cost at a very competitive premium. And buyers did recognize that they were getting a good deal. Homeowners has been cheap in Wisconsin for decades. So it really wasn't a viable option, at least from what I saw, to offer that.
Yeah, when the carrier that I worked for, we actually had the roof payment schedule was actually the base policy, and then they were sold replacement cost or ACV as an endorsement. So I mean, and I only I maybe 1 out of every 30 claims would I really come across an active RPS, but I mean, they were there. But like I said, yeah, it was the base. It was actually the base policy, and the other ones were actually endorsements added on top of that. So,
and I'm sure the premium to go to full replacement cost was dirt cheap.
Oh,
I mean,
yeah, sure.
It was dirt cheap. Yeah.
I think just in follow up to that, and just to kind of pull together a concept, Janet, that you had talked about too. Brian, you talked about what's going to become more common in the future. Certainly hard to tell. And so this is entirely speculation on Chris's part, but it would not surprise me if the reinsurers start asking the carriers, hey, do you folks have roof replacement, endorsements on your policy? Because that likely is going to be could be a factor that they look at and would affect pricing. And so that sometimes can influence whether more carriers go down that path or not. So that's, again, just speculation on my part, but that's a guiding force. And back to Daryl, what you were saying, you're right. I mean, this is, again, just Chris's perspective, but reinsurance, generally speaking, in the Midwest had been very available and rather cheap. Many reinsurers thought this was a safe haven to protect themselves from hurricane exposure, to offset. And now they're seeing that maybe isn't the case. And so it's not as available and not as cheap. So they're starting to ask a lot more questions. So it wouldn't surprise me if this is a direction that it goes. And so that's also, like I said, kind of a force, a guiding hand to see what carriers might do in the future. But that's all speculation.
Sure. Yeah, I think you hit it on the head, Chris. And I think those discussions are happening from the reinsurer down to the insurance company about what is your strategy. I think on the commercial side, especially, what is your strategy on wind hail deductibles, and that are you implementing percentage deductibles? I think those discussions are happening on the reinsurance side.
Go ahead, Nick.
Yeah, so I'm just curious if we're doing, has the OCI talked about if there's any outreach that we could be doing with other industries like contractors to let them know, what's coming up around the bend to help the communication, or is that something we could look into?
I mean, I'd definitely be willing to put that on my list of things. Like I said, my biggest goal and one of my objectives when I took this role was outreach and education. So, I mean, if I think that could be helpful. I mean, they tend to be the middleman in all this, and so legally they're not supposed to be representing or discussing the policy, but I mean, they're the ones who explain certain things to the consumer. So yeah, I mean, I would definitely be willing to explore that option.
Yeah, I just think it'd be helpful for, again, the consumer, if there's a trade or an association or something we can do to bring them into the discussion. There's the occasional contractor that'll have the opinion, roof is good and you should have this for coverage. Well, it's kind of in an area that you shouldn't be. So it'd be nice to bring them into the loop as best we could.
Sure.
Sounds like a good takeaway. Council members, other thoughts?
I had a hypothetical question with regards to metal roofs. And I know we've talked a lot about asphalt roofs and the life of asphalt roofing, and how they've what has happened with regards to weather events and their lifespan here in the Midwest. Is there anything going on? Obviously, certainly I've heard metal roofs are much more durable, they last longer, they have a much longer lifespan. Is there anything with regards to, hypothetically, of course, because I know that there's things that obviously, as Chris talked about, that can be discussed and cannot be, with regards to metal roofs and something with regards to what sort of impact that could have on someone's, homeowner's policy or something down the line as, things are moving toward the roof schedule. If someone, put that extra dollar, put those extra dollars into the metal roof, are they going to, could they be hypothetically saving on their policy, because they're investing, and showing that to their insured. Am I making sense here?
Yeah, most of those roof schedules do address a different category. Metal roof, they'll have asphalt shingles, they'll have metal in a different category there, and the percentage changes for the percentage of replacement cost are different for the metal. than for the asphalt shingle. So those investments are to their benefit still, in my opinion. The one thing that I'll say on metal roofs that is common, it's been more common on the commercial side than the personal side right now, is you'll find cosmetic exclusions on there, so you need to be careful of that. And that has kind of been more common than not for metal roofs, a cosmetic exclusion. So there is that to also weigh into going into that metal roof option. But there is a different schedule for metal roofs that's a little bit better than the asphalt one for most carriers that I've seen.
And I think Nick, just as a general trend, is certainly in the past used to be that carriers would generally recognize that metal roofs, especially on homeowners, they might actually get a bit of a discount because it's more fire resistive, or it's more but that would all depend on an individual company's rating factors. But I don't think that was unusual in the past either. So the consumer got a bit of a reward there. How that works now, I'm not sure, but I think that generally had been recognized. And I think you're right. At least some of the various schedules that I've seen as it relates to the roof payment schedules, metal is in a different column, and it has a different longer life factor. Jeff, does that answer your question?
Yeah.
Great. All right. OCI, any other follow-up questions on the roof replacement costs item here? All right. Council members or Jeff, any questions from the floor?
I'm not seeing any questions right now in the chat feature, and I don't see anyone else right now with their hand raised.
Okay.
Go ahead. Currently, right now, we're at 2:15. We got 15 minutes left. I guess it's up to the council whether we want to start a whole nother emerging topic or not.
Good point. And council members, unless you object, how about this? Perhaps OCI for this last topic, maybe you can frame the question, and maybe we won't get to the question, but that'll allow us in the meantime to kind of think about your question, so that we can bring it forward at the next meeting as well as an agenda topic, and maybe have a little bit more of a prepared, robust discussion, if that makes sense. If, however, OCI, you'd rather hold on the question, that's fine, and we can conclude the meeting. I'm fine either way. Council members, objections to having OCI at least pose the question for our thoughts? Not hearing any objections.
Well,
Amy,
Janet,
yeah.
did you? I saw Janet had her. Janet, did you have your hand up? No.
I was just giving a thumbs up to Chris. I'm on board.
Okay.
Chris recommend.
Okay. Well, thank you, Janet. I appreciate that. Well, Amy and Jeff, why don't you, as we talk about that, how emerging technologies are changing the P&C industry, because that is no doubt a large and fascinating topic. So maybe if you can just kind of share with us at least currently what's on your mind and pose that question, that'll give us an opportunity maybe between now and our next meeting to think about it a little bit more. Would you be comfortable just kind of telling us what's on your mind?
Yeah, this one is mine, actually. So this is, obviously, I try to come with, a topic to try to spur an interesting open dialogue. And we had Amy's question, which I thought was a very good question to spur dialogue as well. And this one I found very interesting that, we haven't spent a lot of time as a council yet speaking about the emerging technologies sector, specifically, the InsurTech. And, as I go through and look at, several articles a day, through Insurance Journal, Carrier Management, things like that, I see all sorts of articles that are going on, and one caught my eye at the end of November, early December, that several insurtechs, Blue Branch, Clear Clover, Lemonade, Root Insurance, they were forming an insurtech coalition, and they were looking to shape the future. In their own press release, they talked about reshaping the future of the insurance reshaping the future of the insurance industry. And what I guess looking at that, I thought about, what are, as I always try to do, looking at it from the micro Wisconsin and the macro as a nation and throughout the world, looking at their press release, they talked about one of InsurTech's biggest challenges is to help shape the insurance landscape while carefully considering the interests of all stakeholders, employees, regulators, government entities, and most importantly, customers, was what I'm quoting from their press release. And they believe that their InsurTech coalition answers that challenge. So, I wanted to kind of open up a dialogue and talk about, InsurTech, and some of these new and emerging InsurTech technologies and what their impacts are, not necessarily these specifically, but, in InsurTech and what that impact is on a state level here in Wisconsin, on the P&C industry, and on the macro level. And that was my question.
And a very broad question and a good question. That's a whole, when you talk about InsurTech, and I'm not an InsurTech expert, but certainly there's a lot of activity there. What I wonder, Jeff, is maybe what we can do, and I'd ask council members to please, give input on this too. That's a topic we'd like to discuss. I'm aware of some organizations that follow this a little bit more closely, and maybe we could ask them to be kind of a guest presenter, perhaps, at a future meeting, just to talk about kind of the landscape a little bit. Jeff, you asked a great question that probably you could say we could talk about this for 3 days, or we could talk about it in a good way, in a nice focused presentation. It can be anywhere in between. And so I think that's a great topic. And I wonder if that might be a better way to approach it, because they're a little bit more future looking. Then we don't have to worry about, well, gee, what's West Bend doing, or State Farm, or American Family. We can kind of take, not that there would be awkwardness, but we can take that out of the discussion too. So that's the thought. Council members, other thoughts? Jeff asked a great question. It's a important and a broad topic.
Yeah, I would jump in and say it's a topic that I'm really looking forward to having, because when you talk about InsurTech and what they are doing or what they tried to do, and now they're partnering with independent agents, and that's one aspect of it. But then you haven't even brought up like artificial intelligence and how that's going to play a role in the future, and it is going to play a major role. And I think that's going to be at least a half-hour discussion on its own. So.
Yeah.
Great.
And that was, and Daryl's kind of hitting where I was, kind of letting the conversation, those were kind of the points that I was, hoping to kind of let the conversation go. Would it kind of run down that rabbit hole? And there were a number of different, different rabbit holes that we could jump down. But, this was what I was hoping, could spur, a really open dialogue here. But, certainly, we have, and we could, like I said, save this topic, bring it back for our next meeting. But, there are a lot of other issues going on, and we've got a few months before our next meeting, and there could be another tomorrow could spur another hot topic, because it seems like every day another hot topic spurs. So that is that's kind of the good and the bad of the industry that I love, that we're in. There is always something brand new around the corner.
Absolutely. Well, I think, Jeff, what I'd like to do is maybe you and I can talk about this in the interim and identify how we can bring this back to a future meeting. Do we hold a different kind of P&C advisory council meeting totally around the presentation? There are lots of options, but it's a good topic. Like I said, it's important. It's a broad topic, and I think we can foster a good discussion and give it more than the 15 minutes we had left for the meeting. So if you're okay with that, and if there aren't objections, maybe we'll take that approach.
Yeah, if that's what the council is, if they find it's an interesting topic and they would like to open this up and explore it, then I'm happy to do so and see what we can do.
Sounds great. Council members, any objections to the approach or other ideas?
No objections. When is the next, what are we doing, 3 meetings a year?
We do 3 meetings. So the next one would probably be sometime in the summer.
Yeah. I mean, we'll have even more information then about emerging technology.
Exactly. It's an ever-changing topic.
Yeah. Good point, Daryl. All right. Very good. Well, it looks like we have then reached the end of our planned agenda, and Jeff, as you mentioned, we'll be aiming for a meeting in summertime. So we'll send out notifications when we're able to pick a date and perhaps poll the council members. So that'll be upcoming next. Anything else to come before the council before we adjourn? All right. Well, again, thank you everyone for pivoting, for attending virtually. I thought we had a great discussion. Sometimes I hesitate when we have a large meeting by Zoom, and are we going to have good dialogue? We had great dialogue today, so appreciate it. Council members, thank you very much. OCI, thank you for organizing this, and everyone in attendance, thanks for sticking with us. We will consider ourselves adjourned. Look for the next meeting upcoming, and in the meantime, enjoy spring. Take care, everyone.
Thank you.
You all.
Thank you.
Thank you.